All right, another week. We have our latest hard fork tools out there now. You can check out the latest release on BitShares. We have fixed numerous things in this release, including the account history is a lot. We have a new API call for fetching account history. It's a lot easier to use. Should allow you to get all of your history and should hopefully help exchanges if they update to the new API. We fixed the bug that was preventing us from updating the fee-based asset for stealth. We did some new code in there to help us debug and test all this stuff. We disabled negative worker votes and some general cleanup. Annual memberships have been deprecated, and we fixed an issue that was causing all wallets to get spammed with massive updates. And we also enabled optional WebSocket compression. A hard fork is going to take effect this Wednesday. And after it does, we should see a significant improvement in the performance of the Light Wallet in low bandwidth scenarios. And we should be able to continue rolling out with the stealth asset at that point in time. So this is a major bug fix release. Lots of improvements in performance. So I'm pretty happy about that. We did not get the free transactions and percentage-based fees in there. We wanted to fix these issues without the delay required to code review. Puppies. The code for free transactions needs some extra code review and the test net that actually verifies that it doesn't expose us to vulnerabilities. So we postponed that and released this. So the network will have another release in a month or two that includes all of those updates after they have been thoroughly vetted and tested. Block trades and Theoretical are working on a test framework which allows us to fork off a test net from the main network by switching all the witnesses and producing blocks. And with that approach, it should be very easy to test new hard forks and features before they get migrated into the main chain, potentially causing havoc. So I think we're doing better about grouping things. It's been 1 month since the last hard fork. So we're on a pretty good pace of not too often and not taking too long between hard forking changes. So I guess that's the status update there. There's a new stealth wallet UI that's about to come out. It's got a whole lot of features in there. We're going to roll this out in phases. The first phase is to create a new light wallet downloadable wallet that supports it. We're going to roll out with that first. And it'll allow you to create a whole new wallet just for your stealth. The reason we're going to do this is to make sure that we don't corrupt anyone's existing wallet in the migration to the new backend representation of how we're storing this. So we can test it there. So if you want stealth, there'll be a dedicated stealth wallet you can download and use it on the BitShares network. After that's proven itself reliable, and we've grown confident with our ability to upgrade without losing anyone's money, then we can deploy it to OpenLedger. But the theory is anyone who cares about stealth is very important, cares very much about security, and should probably run a light wallet rather than using Open Ledger. Anyway, so that's the phases we're going through. There will be a hosted web wallet for stealth. It just won't be on the Open Ledger domain as well. So if you want to try that, you can. We're working to roll this out. Obviously, as complexity increases, it gets harder and harder to change things. And this is something that we are constantly fighting, is how to manage the complexity in a maintainable way.
So would that increasing complexity to which you're referring right now be a valid reason why new features and new concepts, new DACs might be better off as side chains? And to curve the conversation around here a little bit, but I've been thinking a lot about this even in the last few months as it's started to occur to me that putting so many different features onto BitShares would just increase the, sort of chaos, as it were. I know it's not technically chaos, but the amount of things going on simultaneously. It seems to me like the testing period for each new feature would just sort of stretch on farther and farther as you were adding complexity.
The BitShares platform already has so many features, so many things that can break if you're not careful. Things that we have to test, regressions. And even though we have a lot of testing at the low level to make sure that the protocol is all unit tested, as you start getting up to the higher levels, you start to see the user interface is frequently breaking. And it's frustrating to me and our developers that someone who does something for stealth ends up breaking transfers for everyone else. The number of times that we have a working feature go backwards is unacceptably high, in my opinion. And that's a large part because we're trying to put all of these things in a single wallet. We're trying to put all these features on a single blockchain. It very much seems to me that a sidechain approach is a more sustainable growth pattern. It allows us to focus on rapid iterations without impacting the stability and predictability of the core BitShares network. There was an interesting post I read about why Ethereum is, I guess I'm probably paraphrasing here, but basically why it's going to fail. And it's not going to fail because the technology, it's going to fail because blockchains need to serve customers first and foremost. Having a Rube Goldberg device that accomplishes some task doesn't mean anything to customers. They don't care how you do it, they care what you do. And most blockchain solutions are about doing something that's already done better elsewhere in a new way. It's more robust, more decentralized, but as far as user benefits go, that's relatively low. And in order to get that additional robustness and decentralization, it's compromised user experience. It's harder to use. It puts more responsibility on users. So it's not a clear decentralize it and it will be better situation. So that got me thinking about BitShares. Adding scripting support to BitShares on EVM would give us an amazing technology selling point. But what practical value does that have to the end user? And does adding features like that negatively impact our existing use cases? So having a sidechain based on graphene could provide real competition to Ethereum for that niche of the market. Ethereum serves the tinkers and coders, people playing with toy projects, people who don't want to host things or manage deploying their own network. It's a lot of work to launch a blockchain, deploy and maintain it. So if you don't want to do all that work and you just want to write a little bit of code, Ethereum or something like Ethereum is perfect for you. So I guess that's my overall feeling is if it's not worth creating a sidechain for, we should carefully consider whether or not it's worth doing.
The EVM is more infrastructure. It doesn't directly impact adding users or end users. It's a tool for infrastructure to do other things. So it's an indirect way to users. But I agree with you, Bytemaster. It's just not worth it in terms of an immediate gain to the market cap. It's a great selling point, but not so much for bringing in new users on a quick basis.
And I'd like to address that. You said it was foundation. Well, that means something else is what brings in the users. So you identify some killer application, like say prediction markets. You ask yourself, am I going to build my prediction market on a slow foundation that's really general? Or in order to serve the customers and give them the best experience, am I going to build something that's the highest performance customized application where I don't even care about being on a general purpose platform? All I care about is serving my customers, and which is going to take longer to develop. Something on a restricted scripting language that's slow, or something that's more or less open and unrestricted and is faster. This is sort of proves the point that anyone who's serious about really scaling up and bringing lots of customers, they don't care about the technology as long as they can get the job done. And they can get the job done as cheaply as possible. And a lot of people in the cryptocurrency space are very much focused on technology. Is it decentralized? Is it mathematically pure? All these concepts that actually don't provide direct value to the end user. They provide indirect value, but it's not the type of thing that's going to say, yes, I'm going to buy that because it has this. People don't buy decentralization. They buy a service, whether it's centralized or decentralized. As long as the service gets what they want done, great. So if people have a centralized exchange that does everything BitShares does, the exchange is providing the service, it meets their needs. If it's suitably secure, great. Only if a centralized exchange can't provide the service will they consider a decentralized exchange because, oh, they are providing me a service and there are no other alternatives. That is where the growth is, to find a service for which there is no other alternatives and provide it to the market. And then customers will come for that service. Now, sidechains as a concept is a service that's not well managed right now. There is no decentralized multi-sig authority that's able to interface across multiple blockchains and be the escrow agent of funds, if you will. That type of service doesn't exist. All you have is centralized, this company's got their multi-sig, this company's got theirs, but there's no consensus on that. So I think that's a area that there is some demand for in crypto, is bridging all these different chains together. It's something that's going to be necessary, and whoever can provide that service the best wins. But even there, you're competing against the centralized service providers that bridge things through exchanges, right? An exchange is nothing but a side chain. They are side chains. They might not be fully transparent. They can get hacked. They might not have robust multi-sig. They might not be subject to community approval or voting. But effectively, each and every exchange is a sidechain bridge. You send your coins in, get your coins out. Shapeshift, block trades, meta exchange. Those are all sidechain providers that could, if they improve their security so that they had multi-sig on all their funds that they received, and then they came up with a consensus for changing that multi-sig so that it could be distributed across the globe, then they would be a lot more robust. So we want to take Shapeshift, meta exchange, block trades, and make it a dynamic multi-sig on the funds. So there's that. Now, LuckyBit made a point that you have irrational people who prefer centralized Mt. Gox. I think it's irrational to call other people irrational. We are all irrational.
That's an excellent point.
We all have our biases. We all have things that we are predisposed to just from our life experiences that we make decisions at a subconscious level that we are not even aware of. So each and every one of us acts in an irrational way. And rationality, of course, all depends upon values and what do you value. And given a different set of values, you can have completely different rational outcomes. So it's usually better to, instead of calling someone else irrational, try to understand why they think what they're doing is rational. And then you'll get to, well, what do they value? And that gets you one step closer to understanding how to market and sell to them. So I think until the major governments decide to really crack down on crypto and introduce oppressive capital controls, negative interest rates on all banks, withdrawal limits, transfer limits, to the point that it starts impacting people's ability to earn an income, the centralized exchanges have an edge. We should focus on what we can do to better replicate their experience and to provide value directly to users rather than introducing more toy smart contracts that attempt to solve problems that aren't real problems, right? I guess that's just my thoughts on the subject.
I had another question. It might be a slight change of subject, but I've been thinking about the bit assets, and You know, I'm going to use Muse as an example here, because there's been some discussion about, well, how is Muse as a sort of a standalone blockchain going to maintain, you know, their own robust bid asset market in order to provide price stable coins to their users? And, you know, the reality that we don't have a super, you know, liquid bid asset market right now, you know, let alone a Muse. I'm wondering, you know, what are the economics of having side chains connected to BitShares, and is there a way to, you know, combine all of the bid asset markets somehow so that it wouldn't be you know, the trading and liquidity wouldn't have to be split amongst, you know, the you know, inevitable numbers of side chains that are all sort of operating their own depots chain?
Yes, that's the benefit of side chains, is assets on one exchange can be reliably migrated to equivalent assets on another blockchain. They might trade and be backed by BitShares, but the committee members, the elected users, are also backing the same asset on, say, Muse, which means Muse doesn't need BitUSD. They can have BitShares BitUSD traded as a sidechain asset on the Muse network. In some sense, we already have the Muse asset trading on BitShares as OpenMuse. OpenMuse is nothing but the sidechain representation of Muse, where we only have a single signer, Open Ledger. But if we change that to a multi-sig authority on that asset, and we made public the records of transfers to and from Open Ledger, then anyone could verify that every Muse that was sent to Open Ledger's Muse account ended up with the appropriate number of Open Muse going to the proper address, right? So you have to make the memos public so that everyone can verify that it's operating as it's supposed to.
BM, what opposition would there be from Open Ledger or Muse for doing a multi-sig for any asset that is basically nothing more than a UIA for that particular representative? In other words, with the multi-sig account that's created, would there be loss of fees from the resulting non-multi-sig operation, or how do you see the resistance of multi-sig in any examples you just gave coming into being?
The primary challenge with multi-sig is it increases complexity and cost to deploy. So even if I'm Open Ledger and I want to use multi-sig internally, to do it properly, I need to keep the keys on separate computers, preferably in separate data centers, and even more so, maintained by separate administrators. So you're increasing the number of people, the number of servers, and so on and so forth that you need just to operate it internally. Now, the reason Open Ledger has Open Muse is so that they can make money on trading fees, as Muse trades on BitShares. When you go to a multi-party thing, so say Open Ledger, Block Trades, and MetaExchange all got together and decided they were going to provide a single joint service, then the same trading fees are going to be divided among three parties. So whereas before it was a effectively winner takes all market, now everyone is guaranteed just a third of the profits because of that.
It almost seems then that the multi-sig that you're proposing or that you're talking about here is almost, I'm not going to say monopolistic, but it's anti-individually entrepreneurial.
It's effectively starting a new business to compete with the existing single parties that's intentionally more secure because they're both operating transparently and decentralized. So if you wanted to compete with block trades, you can implement their business on a blockchain, if you will, with people elected to be multi-sig parties and then deterministically executing their business. It's more challenging to operate those type of businesses in a deterministic fashion. Right now, if there is a problem with their Bitcoin node or their Muse node, these services shut down temporarily, and then they answer their support requests, manually paying out people. Right? It's you're basically trusting the operator to do the right thing. The goal is to refine that to a algorithm that is so polished that you never actually have to file support requests, because there isn't anyone to file the support request to. It's an increase in the reliability and robustness of the service that these parties are currently providing. So, yes, you basically create a blockchain that's competing with Shapeshift, MidExchange, OpenLedger, block trades. And if you do that right, you wouldn't even necessarily, all the fees from those assets trading in all the exchanges would go to a new chain.
So to take this just a step further then, we have a situation now, let's say, where we've got the multi-sig authority that's, overseeing the actual, let's use Bitcoin as an example, and we have Bitcoin that are, for all practical purposes, as secure or more secure than any exchange out there today, probably more secure since of the multi-sig. What can we collateralize bit assets then? Can we create bit assets that are collateralized by Bitcoin rather than BTS?
Yes, you can.
I've been thinking just along the lines of psychologically, right now we have bit assets that are collateralized by, excuse me, well, for all practical purposes, a penny stock, right? Or, a sub penny stock even. Right now, I think we're like at half a penny or a little more. So, psychologically, who wants a derivative asset that's collateralized by a penny stock, right? People want some sort of something with more substance, at least in the market. Bitcoin's at about $400 or so now. So I'm wondering if that couldn't be a sort of bridge or an eye opener that might be able to push bit assets into the sort of mainstream a little bit more, and people can see something that they're already familiar with, or something that has adoption or acceptance at least a little more, and then eventually obviously BTS can also be used, or perhaps any of these multi-sig chain, or I'm sorry, any of these tokens that are secured via the sidechain multi-sig authority can be used eventually, right? So I don't know what are the implications of that, I guess. Do you think that's a good idea, or
I think there's lots of room to continue to experiment. No one's really created a stable coin that's decentralized, trustless, and high liquidity. So there's still lots of room to innovate there. Improving the collateral behind it helps. All you're really saying is you're increasing the number of speculators who are willing to take on leverage.
which is what you need in our model right now, right? I mean, you need people that are willing to short.
Yes, and that's the major problem with bit assets, is that people who are willing to short is a limited supply compared with the number of people who would like to have stable dollars.
Now, if there were multiple chains, would it be possible to essentially have an ETF of these and maybe open up more opportunity for like market making bots. And I feel like if let's say we had Muse USD, Bit USD, Identibit USD, and so on and so forth, there could be an asset that could be created that would be essentially an ETF, which is something that we've been talking about this week in the forums. That could create maybe a little bit better smart coin, or do you think that that's would cause more problems?
I think anytime you try to mix assets together in a basket, you're increasing the probability of loss. Right? You're decreasing the magnitude of loss, but if you put all assets in the world in a single bucket, you're guaranteed to lose. Take all the dollar-denominated assets, right? All the IOU dollars. Some of them are going to default. So if you put them all in one basket, you're saying, well, I'm not going to lose 100%, but I'm going to guaranteed to lose 1% or 3%. So if you put Muse USD and BitShares USD and Bitcoin backed USD all in one ETF fund, then if any one of those fails, you lose a third of the fund. And the probability that one of them fails is greater than the probability that none of them fails. Or, if you pick one, just any particular one failing is going to have a lower probability than one of the three failing. So
you don't think the whole diversification thing applies here? Because the general theory behind why people would diversify would be that more often than not, or at least if the market's big, like what you're saying, like invest in everything in the world at one time, as one thing fails, I kind of see it as like energy moving to another place. So as one thing fails, one business fails, another one rises and gets that.
But if you're only talking debt, there is no gain. There's only loss.
I'll have to think.
And there is no interest on it. So it's like you can even say, well, I got all these loans. Some of them are paying me interest. So the interest will cover the ones that fail.
Are you talking about a basket of separate currencies, though, or specifically a basket of just different versions of different iterations of a single currency?
Yeah, like Muse USD, like essentially
Okay.
You see what I mean?
Yeah, then what Bytemaster said, he was commenting on that, I believe.
Okay, well, I guess that makes sense then to a degree. I'll have to think about it a little bit more, but I appreciate the answer. So, out of curiosity, with the BitUSD, do you feel like that's going to be the end, one of the end places where we end up with this? Or do you feel like there's something that we have to look into to make it better at its core?
As a community, we need to ask, what do we want? Perhaps a more important question is, why aren't we using our own tools? What could we say to people to say, hey, come and join us. We're having a party over here. We're having fun. You want to be a part of this. And right now we're saying, hey, come use our exchange so we can make money. Come use our exchange to trade. We're only going to charge you a small fee. Come use our exchange. It's more secure than the exchange you're currently using, but each and every one of us here is using other centralized exchanges to get into and out of BitShares. And so there's some arguments as well as the chicken and the egg. If we had liquidity, then it would grow. But even assuming we had all the liquidity, right? Assume BitShares had the liquidity of Poloniex. That would be great. What is our message? Why would I ask my brother, who doesn't care about cryptocurrencies at all, to get involved? What's in it for him? Those are the questions that we need to answer. Those are the same questions that every cryptocurrency project needs to answer. We, as a community, are so deep into the theories, the philosophy of decentralization, that we've lost sight of the market need. And we don't necessarily need to appeal to average Joe, but we do need to appeal to a segment of the market with solutions that clearly benefit them. So if the segment of the market that we're appealing to is the people that want to live life without a bank account, that's a relatively small market, but if we can serve them very well, then great. Those are so now a lot of things is timing. If there is global financial turmoil, then all of a sudden people say, hey, I need someplace safe to put my money that's not a centralized exchange, because the centralized exchange, where is their money? In a bank. And what happens if the banking system's locking down? Centralized exchanges fail. So if we really wanted to grow, we should ask ourselves, how can we make BitShares robust and able to operate in the absence of banking and exchange infrastructure we have today? If we don't, if we're not making ourselves able, if we go down when all the other exchanges and banks go down, then I'd argue we're not a decentralized exchange. We haven't achieved the end goal. Things like block trades or open ledger, parts of open ledger, like their open USD, could go down if the banking system suffers. The cryptocurrency exchange and gateways, they'll probably stay up and operational. So what we should really be asking ourselves is, how can we get more value trading and transfer through our exchange network without relying on 3 or 4 gateways? What if we could make everyone a potential gateway?
We have that ability now, except for regulations keep people scared. I mean, we could use that with UIAs, for example, but the regulations keep people from doing that because of the fear that they'll be targeted. Now, T-Bone mentioned something, but once the financial turmoil begins, we'll get an answer to the question of how to become attractive to the people. But that'll be too late, because if we had a flood of demand like that, we couldn't meet a flood. We don't have the liquidity to meet a flood. There will be no way to get massive amounts of money. And if somebody wants to transfer their 401k or other big asset like that into a safe haven like BitShares, they couldn't do it. There isn't enough liquidity to do that. So we need to ramp up slowly and provide solutions that are proven to the people that are thinking ahead now, so that when that type of situation arises, then there will be a solution, because liquidity will be good at that point.
Right. Now, an important concept here is it's really easy for the government to go after one individual or one company. They could shut down a dozen companies. They can't effectively go after thousands or millions of companies, particularly if those companies pop up as fast as you shut them down. This is the asset model of issuing an IOU and then trading it is not a viable model for scaling to, having lots of people issue their own dollar assets and try to trade it. Well, how do I know I can trust it? And you don't. So you need to create a model similar to what Ripple originally tried to do, where users extend trust lines to each other and payments propagate along those trust lines, and where any individual user is operating on a scale so small that it would be ridiculous for the government to prosecute them. In fact, they probably won't even fall into the regulations because they only extend trust lines to people they know and trust. It'd be the same thing as, people lending money between friends. Happens all the time with cash. It'd be ridiculous to shut it down. The primary challenge, of course, is privacy and people not liking to reveal that, hey, I'll trust you for $10, but this other person for $1,000. That has some social implications that are a barrier there. But presumably, if you could create a community that was able to get over those social stigmas or social, you could have a system where people can transfer all kinds of value between themselves without even needing bit assets. So I guess that's where I'm coming from, is making systems that work directly meeting needs of users. And anytime we take our eye off of that and we start focusing on some cool new smart contract, we're falling into the same trap as all the people playing with toy contracts on Ethereum. We need a business to serve people, to meet people's needs. And the better we can meet people's needs, then we'll grow. And until we find that special thing that just meets people's needs and people try it, they use it, and they say, thank you, this is exactly what I've been looking for, we'll have stagnant growth.
Well, real quick here, Xerox talking about the web of trust, which, of course, this is kind of what, along the lines of what we're talking about here, right? And he's saying we can do this using the whitelisting feature. Is there any, is there anything holding us back from doing that, or is there anything that is not covered by the whitelisting feature that would be necessary, do you know of, that for something like a web of trust? And how would that work if it does work?
All right. First of all, so am I suggesting abandoning bit assets? I'm not. Bit assets have their place. And their place is to give some people leverage and other people stability in a trustless manner. So bit assets are very much a necessary piece of the puzzle. But they're just one piece. As far as
whitelist is only for UIAs, is that correct?
whitelist can apply to any asset. You can have privatized bit assets that implement whitelists. And you can
whitelists as well.
Right. You don't whitelist users. The issuer users whitelist other users. An asset specify which users whitelist you're going to be using. So when you whitelist people, you get one bit of information. Person A has whitelisted person B. What does that whitelisting mean? Does that mean you trust them with $1 million? Does that mean you know them, but you don't necessarily trust them? So you need some
mention about how you use the whitelist that you're saying is missing.
Yes. And even if you had all that, you almost need a weighted directed graph where you've got multiple weights on each edge connecting users. And then there's no universal, fuzzy can be trusted. I might think fuzzy can be trusted, but someone else might not think he can be trusted because of the social network between me and fuzzy versus between someone else and fuzzy. I have different interpretations of whether or not something can be trusted. And then just because you trust fuzzy doesn't necessarily mean fuzzy can't go bad, can't get hacked, that he can't be coerced. So saying, do I trust fuzzy? Yes. Do I trust him to resist torture? No. Those are the things there. Anyone can betray your trust. Even if they haven't necessarily done anything morally wrong. You could have expected them to do one thing, and then they don't, even though they weren't obligated to do anything. So there's a lot of factors here, and it's not easy.
This one's a big one to bite off.
I think this is why we need to form up into multi-sig groups, because a group is inherently more trustworthy.
Yes, a group prevents any one person from defecting because it would harm the entire group. And it's really hard to get the majority of a group to defect simultaneously. Particularly if the groups are not self-selecting.
That's an interesting idea in terms of an escrow. I mean, if we formed multi-sig groups ad hoc and offered those groups offered an escrow service, for example, then that could be an element of a sidechain, I guess. I mean, we're basically talking about having a distributed level of trust with a group. So there's nothing that would prevent us from doing that now. It's a matter of marketing that and making sure that other people can trust in it, which is just a matter of building a reputation.
I would say the election, electing members of the group has inherently a greater trust factor if we can somehow work the depots, the qualities of being able to elect people with your stake and whatnot. Seems like it would be inherently more, have more weight behind it, have more implicit or just trust by the people than putting together a group and saying, hey guys, we're all good guys.
You're right. That is much better.
No, I like the one where we're all good guys. No, I'm checking.
Right. So this sidechains works well for moving value between assets where it's all controlled cryptographically. Getting a group of people together to handle, say, bank accounts with dollars in it, that's when things start to get more challenging. Because you no longer, the math is no longer in charge of what happens. So I really, really believe that forming these multi-sig groups and proving how they can be used to move value between blockchains is something that could provide a useful utility. Now, what's the return on that, right? So let's say we spent $100,000, $200,000 to build out that infrastructure. How do we actually make the money back? We've provided this great infrastructure. The people who are parties to that, they can charge a transaction fee every time they process things. And I suppose that could work. Trust is a very valuable commodity. Being elected should give you the ability to charge a fee every time someone moves through there. But how much money can you actually make from doing that? If you're porting Ethereum and Bitcoin into BitShares, and then the BitShares BTC ETH market becomes the biggest market, there could be a lot of money there for the parties to that multi-sig, assuming they charged market fees. But just because you have the technology doesn't mean you are successful. You also have to have the marketing, a user experience that is seamless. So just throwing these ideas out here of things that we need to carefully consider, because we could spend every week adding new little features and miss the big picture. Yeah, I guess that's my point. How can we step back and look at the big picture to make sure that the things we're building matter? And this is why I like stealth. Stealth is addressing a real consumer need. They are used to having privacy with their bank accounts. Anything that doesn't give them privacy is something that keeps them away. Something that we could and should continue to invest in is improving stealth. Now, what we put together for the stealth asset so far is bare minimum proof of concept. It's technically possible for someone to use their web browser to send money between people without having to go to command line, and to do so in a way that is maximally secure, as best as we can do in terms of not publishing information on the blockchain that would allow anyone to tie two accounts together. Obviously, it's incredibly hard to use. Users have to do the transfer, they have to exchange public keys before they can do the transfer, and then they have to exchange receipts after they do the transfer. So there's a lot of side communication that goes on in order to orchestrate a private stealth transfer. So there's a middle ground between what we have now and stealth, and that is where users can send where the wallet can automatically send the receipt to the user through the blockchain. And with that model, users' balances are private, but who they're talking to is not. So people will be able to tell that I sent some money to Fuzzy. They don't know if I sent him $1 or $1 million, but They know Fuzzy's got money and that Fuzzy and Dan have done business. The user interface for that will be much simpler than the user interface for complete privacy. And that's something that we should consider.
Can we have both options?
Yes, adding that option doesn't necessarily take away from the more secure option that we have today. I'm just pointing out that in terms of addressing needs that directly impact consumers, directly impact our users, privacy is pretty high up there.
Real quick, I would love to go back to what Crypto was talking about just for 1 minute. Yeah, it's like a super DAC idea essentially. If you look at the space right now, right? Look at NXT, look at Counterparty, look at even Bitcoin, right? Well, Bitcoin is the best example because it's so large and you actually have individual blockchains as far as altcoins. But you can look at the natural tendency for the market already is saying, it's already telling us, if you look at Bitcoin, there's all these altcoins with various changes. Some of them are small changes. Some of them are complete overhauls, kind of like what BitShares is. And what it sounds like, Bytemaster, what you've been saying to us is that BitShares seems to be the best chain out there for side chains in terms of very fast movement and essentially potentially trustless, or maybe not trustless, but there are ways of making it safe to move between chains as well, right? Where it's not as easily co-opted as maybe some of these other ones. Now,
we can elect our own multi-sig. We can elect our own multi-sig, right? We can democratically elect.
But not only that, right? We also have the potential to govern ourselves. Like, what if we have other depots chains that come out? People can, create their own depots chains, kind of like altcoins. Only they can connect up via side chains to BitShares. They don't have to wait 10 minutes or 10 hours for changes across chains.
Yeah, what you're saying is we have a very robust platform, but there's still a missing component to why that platform is being used. I think that's what you're getting at, right, Fuzzy?
Well, imagine if all these altcoins could plug into Bitcoin and have the speed and the governance features we have. And then also imagine that we have the ability, or what if Bitcoin had the ability to say, oh, wow, this coin just came up with a great feature, and we would like to just pour this over, and the committee will vote on it, and that's pretty much how it works.
Right, all of those are pointing to a very robust platform. It gives us all that control, all those features, all that great stuff. But since we have all that stuff, why can't we get traction with that? That's, I think, what Bytemaster is saying. There's more to it. We got to find a way to please customers using all that great stuff, and that's a component that we haven't found a solution to yet.
Well,
not only haven't we found a solution to it, but no one has found a solution to it. And I think it's important to remember that we are just one team, one community out here trying to figure out how to meet the needs of the customer. We're a very decentralized team compared to our centralized competitors. That's a strength and a weakness. I think BitShares is perhaps one of the most decentralized communities in terms of governance and involvement and ownership. It's quite amazing to see how decentralized it is and how many people are involved. But we should not get down on ourselves because we haven't, because no one else has either. The entire crypto space is competing and adapting, trying to find the right combination of features, user experience to meet the masses. So, but I need to move people together, consolidate, right, would be great. Why does PureCoin need to have its own blockchain? I also think it's a good idea to get blockchains that have stable feature sets and then don't change. Instead, add a new chain. That strategy has worked very well for Bitcoin. Ethereum doesn't have to change because they are Turing complete. The fact that they're planning on going through some pretty serious overhauls in the future, I think is, I think they're going to end up facing a lot of trouble with those overhauls because not everyone is going to want to. And if anything goes wrong with any of their overhauls, it could have severe negative consequences for their platform. That'd be like me saying I want to completely overhaul BitShares again with a whole new implementation of a consensus algorithm, a whole new transition. We know that transitions are painful for users. It's bad enough when you're small. If you're the size of Ethereum or Bitcoin, the number of people you're going to impact is much, much greater. So if we solve the problem of growing without changing, we will be much further ahead.
That's a good point about it's not just our problem that we're trying to solve uniquely to our ecosystem. It's endemic to the whole crypto space. So that's a very good point, Bytemaster, which sometimes I seem to overlook. And it's important to emphasize that because that impacts decisiveness sometimes that occurs in our community. So I think we've had so many fantastic ideas presented, and it's really difficult for us to figure out where the focus should be on all that flurry of ideas to know it, because it's all an experiment. So all we can do is come up with a consensus as to which ones are the best ones to try and move forward and kind of figure out a way to put a limit to our debate and just say, well, this is the one that's the consensus, and so let's try that now and move on, because nobody knows the answer. It's all an experiment, and it's just a matter of getting enough people on the same page to agree that that's the next phase of the experiment we should conduct.
And funding it.
That's all part of it. That's part of it for sure.
And that's so. Let's talk about funding things. If you fund something with dilution, there's barely enough funding to properly maintain and bug fix the existing feature set, let alone develop new features. Anytime we go forward and develop new features, we introduce new bugs. And the user experience continues to suffer as a result of bugs and downtime. And it can be something as stupid as we add compression to WebSockets, and now some browsers don't connect, or things that should be, it should clearly be an improvement. It's not always so cut and dry. It would be nice to polish a feature. In fact, I would almost prefer to see us remove features and focus on making sure the features we do have work 100% of the time and are reliable. Because that will provide a better experiment. You get too many experiments going on at the same time, you don't have any control. You don't know what was the critical factor. Is BitShares taken off because of smart coins or because of sidechains? Is it taking off because of liquidity or something else? Or is it failing because of that? Is it failing simply because you have too many simultaneous experiments? If you didn't have all those simultaneous experiments, something might have succeeded, right? You get too many variables, not enough control, and overall instability. So,
I mean, if you think about it, various alt chains that do these that kind of exist on their own and fund their own feature sets, wouldn't that kind of be a good way of doing it then? So essentially you're able to gain that technology whenever it's created from another graphene chain, but that graphene chain might have a completely different community with different needs, different politics. It just offers so many more options for us to actually reach out and for other chains to reach out and say, oh, we can gain this from you too.
well, I think it's more than that. It's not just that some other chain has a feature, so we copy it and move it into ours. We know from experience that just because it exists somewhere else doesn't mean it's copy paste done. We have it. You disrupt your own experiment by trying to merge someone else's. Instead, what people should do is they should sell the one that's not working and buy the one that is. And that the market will then price each experiment independently.
Yes.
Now, if someone wanted to create an experiment for sidechains, then they'd be in the position of potentially becoming the bridge between all experiments, which means they're selling the shovels to the gold diggers.
Yeah.
And that is perhaps the least risky option to pursue. If you assume that there are going to be hundreds of new experiments in the years ahead, and that people are going to want a means to move between them, that's why the cryptocurrency exchange market has taken off, because they're serving the need of all the experimenters out there. The exchanges are selling the shovels to the entrepreneurs that are running experiments like BitShares.
That makes a lot of sense. And, I'm just kind of picturing in my mind a possible scenario. I mean, if people are looking out at the cryptocurrency landscape and they see BitShares over here with a half a dozen side chains that are all depot side chains and all separate communities doing separate things, that's going to be sort of an impressive thing to look at. And they're going to see, some other some earlier iterations of consensus algorithms doing their little thing over there by themselves. And they might think, hey, this is cutting edge here with depots. I can get in here. I can spin up my own blockchain. I can start doing stuff at 1 second block times and all these other, great, sort of basic features that we have, not to mention probably a library that will build up of depot smart contracts that you can, kind of pick and choose what you want to put on your chain, since most of it or all of it will be, open source to a large degree. So it seems like just that sort of end vision in and of itself lends itself to a lot of possibilities for sort of magnetizing, bringing more people, bringing more eyes to the experiment. I was talking to somebody the other day about the little market cap surge we had last week, and the only thing that was in my mind at the time was, well, the best thing about this is hopefully it'll bring more people to pay attention to what we're doing. People will see this and go, oh, okay, I'm going to buy some, and maybe a fraction of them will go off the exchange, actually put the token in the BitShares wallet and try to mess around with it. So I mean, I think that it keeps coming back to that, and it's not an easy nut to crack, but if we can, I think what you mentioned earlier, Bytemaster, about having a party, and making so much noise and having so much fun that people want to come and join us. Something like figuring out how to assist people or to attract people to spin up their own DPoS blockchains and plug into BitShares and then operate their own deals, and that kind of situation seems like we would have advantage over at least all the other consensus algorithms that are out there right now. Who knows what
Real quick,
someone will come up
Crypto,
with in the future, but
do you mind if because I just want to piggyback on what you're saying, because wouldn't wouldn't that potentially enable some of these things to be easily spun up because Docker services seem like pretty much push a couple buttons and enter some information, you're good to go.
Okay, so let's talk about this. As someone who's launched a blockchain and maintains it, and who's done it for use, and we've seen BitShares PTS. Deciding to create a new blockchain is not something you do lightly. It's not something you do unless you've got hundreds of thousands of dollars ready to invest in a new chain and a plan to be committed long enough to see if it gains any traction. If you don't have that, you shouldn't even start, right? You don't start building a skyscraper unless you can continue. You have enough money to build the skyscraper. And in this case, the idea of starting hundreds of blockchains to test individual features, that's not how it works. Instead, how it works is you identify significant changes, significant experiments, and you go and you create a chain and dedicate it to that. You find something that's different enough from everything else that's out there that you can attract investors and you can attract speculators to speculate on it. If all you did is take BitShares and add one thing, right? Let's say that one thing you add to BitShares was liquidity rewards. Depends on how different it is. Maybe if you took BitShares, started a new chain, and offered gargantuan liquidity rewards on that chain, something far beyond whatever dilution rate BitShares allows, then you could have a real competitor. That would be different enough that people might say, well, maybe I'll go buy that. But if you're going to do that, you need to have a plan. You need to have a team and be a credible competitor. Without a team and developers, if you're just a lone guy out there releasing a GitHub repository, I guess what I'm trying to say is you have to do big experiments that are vastly different versus small experiments that tweak something. So an experiment like tweaking the hash algorithm on Bitcoin, that might have been a big experiment in Litecoin days, but such an experiment doesn't get you anywhere today. And Ethereum's tackled the entire ground of general purpose computation on a blockchain. Someone who creates a variation of Ethereum that just tweaks something small is going to have a lot harder time gaining ground. So I think the small stuff doesn't make or break at this point. I think all the existing solutions are missing relatively big components. And we need to experiment in much bigger ways if you're going to create another chain. Adding liquidity to BitShares, that's a small change. That it makes more sense to add that as a worker proposal to BitShares. BitShares sort of has the model of we fund things via worker proposals and we adapt and we change. That's the experiment that BitShares is running. T-Bone has been mentioning that we need liquidity. And liquidity is key to the success of a decentralized exchange. And I agree entirely that liquidity is necessary. If you want people trading on the exchange itself. Good news is our liquidity is growing. Little by little, people are trading, and growth yields future growth. I'd say the biggest challenge that BitShares faces is what happens if we had all the liquidity of Polynix on the BitShares network. What does that do to the value of BitShares? And I think the biggest challenge there is to look at Next and Counterparty and see what's the value of those platforms relative to the value of the assets trading on them. Figuring out how to convert adoption into value for BitShares holders. That's the magic that needs to be solved. Otherwise, bringing liquidity, it might generate revenue for BitShares if we charge transaction fees on it, and that revenue will give BitShares some value. But that liquidity will not get BitShares value equal to Bitcoin unless BitShares themselves become a currency like Bitcoin. So there is value from the network effect of BitShares as a currency. And by having a lot of trading occurring on our platform, the BitShares gain greater utility as a currency. They have utility to pay fees. They have things like that. But that's the challenge, is to make sure that and that's the thing about bit assets, is bit assets are something that give BitShares value. They're secured by BitShares. You need to have BitShares as collateral to create them. Anyway, I'm rambling at this point in time, and we're an hour and a half into this. So,
yeah. Well, I think that it's important that we keep talking about the side chains and all the potential of what we can do with some of this stuff. Now, I'm going to have to be honest with you. I'm going to have to sit and think a lot of what you said over today, because you generally bring a lot of good points that I have to digest, and a lot of which I generally have not thought about until you bring them up. But I just want to thank you for coming here today again and explaining your thoughts on it and answering answering questions with the experience that you have. Because let's face it, like you said, you pretty much launched and maintain all this, right?
Yeah. All right. So, let's talk liquidity rewards real quick for T-Bone. Because we talked a lot about philosophy so far, and that philosophy is doesn't give us any direct value. What we need to do is use that philosophy to make decisions. and these Mumble sessions should be used to do that. So if I had to make a recommendation for the direction and the decisions that we should make for BitShares, it would be to focus on the exchange and being a single thing. And by focusing on the exchange, you need to pay for what you want. If we want liquidity, we need to pay for it. So implementing liquidity rewards is one part. Being an exchange has two aspects. You need privacy and you need liquidity. Everything else is secondary. The whole sidechain discussion is a great way to get assets onto the exchange that are trusted, pegged, and directly helps the exchange business. So those are my three things. One is making Stealth easier to use. Two, implementing the liquidity rewards based on the algorithms that we've talked about, rewarding people who provide liquidity on both sides of the books and who leave their order on the book for a minimum period of time before it gets filled. The amount of liquidity rewards will have to be voted on via a special worker proposal to fund liquidity in particular markets. I would go so far as to say that as a whole, the network should focus on perhaps 3 markets, and only on those 3 markets. Wallet should be updated to only show in those 3 markets unless users really seek out and like manually add all the extra markets. Having actually the 3 markets I was thinking was not USD, Euro, and CNY. Those are all the same thing. They're fiat currencies pegged to a national currency. I'm thinking USD gold and gold USD.
Gold USD.
Yes. Not gold backed USD.
Okay.
Yes. We have 2 bit assets, gold and USD, and we want liquidity in those pairs trading, because when you're trading that pair, you are not exposed to BitShares directly. You're indirectly exposed to the collateral backing it. But traders can then come trade gold versus dollars. We only have to subsidize liquidity in 2 markets, well, 3 markets in reality, but it's all highly coupled, right? Liquidity in gold improves liquidity in gold USD. They all reinforce each other.
Does this mean that we can successfully market gold-backed dollars again?
No.
Missing this. Okay, so you're just talking about the pairing.
Correct. So it's focus in stripping out anything we can, right? Apple finds a way to strip out floppy drives and CD drives and cables and extra ports. If we can live without it, we should. Is my take. We should ask what is absolutely critical to our success, and we should focus on that. So liquidity has 2 parts. There's 2 ways you can get liquidity. One is to subsidize it by paying people who provide it, and the other is to implement the bond market. Bond markets allow people to borrow and sell, which basically creates more volume on the exchange. It gives traders more options. So if we had, I guess bond market's not the right term, but it's really margin trading on the blockchain. And by implementing margin trading using the proto algorithm I published on the forum, that would fall in line with things. So, general opinion,
that was just real quick. Didn't you say that the bond market was second in priority, though?
It is. It's. If I wanted to like focus and distill BitShares down to its core goal of being the best exchange, and really try to grow that, and it's like trying to start a fire. You don't start a fire by spreading your wood all around. But if we have a clear path of this is how we're going to grow, and anything that's not on that path, we can more or less ignore. Okay. So side chains is something I think can be done by a third party. You don't need to change BitShares to implement side chains. All you need to do is write some additional software that the witnesses can run. And if the witnesses run that software and run BitShares, then you've got side chains. So I think that's a very profitable business that should be spun off and started by someone who's got money to invest in that. BitShares should focus on being its own niche and allow someone else to solve the sidechain issue. So,
Gotcha.
So that
you said that there were many side chains that you think that are probably coming, or in the past. Can you talk about that at all?
I think based on this discussion, side chains should be moved to a separate topic and is something that we can say, yes, that's a parallel service. It's not something that is BitShares. You can use BitShares witnesses, or you can use Bitcoin miners, or you can use Muse witnesses. Once someone writes the sidechain software, how you determine who the set of cosigners is can be done with very different algorithms. So I would suggest some entrepreneur, potentially in this community, utilize the BitShares witnesses as a option. But as far as the BitShares protocol concerns, sidechains don't affect our protocol. It's like OpenLedger is, right? OpenLedger can completely change their wallet. It does not change the BitShares protocol. So at the protocol level, subsidized liquidity rewards or implement margin trading. Those are the only two things that need to change at the protocol level for BitShares. Everything else that BitShares should be doing should be focused on stability and robustness. If anything, I would look for things that we can remove from BitShares. If could improve our stability.
Like annual memberships, for example.
Yes, annual memberships are an example of something that we removed because supporting them was costing us more than they were benefiting us. It might even get to the point where we want to remove lifetime memberships if those things are not relevant to what's ultimately going to make BitShares successful. So, people don't like it when you take features away. And we shouldn't change something that's not broken, because even removing something can break something. So I'm not suggesting we go and start spending money to prune things out, but in general, we should focus all of our efforts on the things that matter and kind of discourage things that don't matter. Eliminating the trading fees, I think, is also something that would benefit the direct business model of the exchange. If we want BitShares to grow because of network effect, trading fees impact network effect. They cause friction. Every dollar we collect in fees is likely harming us with network effect. So as long as we can prevent abuse, the system as a whole is better off. So I guess this long-winded thing says we should continue to implement the free transactions that ABIT has. That's in the pipe. Implement the subsidized liquidity. Implement the bond market. And as a background to all this, focus on stability. Anything other than those tasks is a distraction and from the BitShares core value proposition of being a decentralized exchange. If we start diversifying, we're just going to introduce more bugs. It requires focused effort. And I think we should do these things one thing at a time. Trying to do them all at the same time is going to be very challenging. So.
And do you think that we have the funding to accomplish those three things? I mean, do you think that this is something that's a realistic goal that we can put in play?
Honestly, the rate at which BitShares is funding the support developer is through block trades is not enough to see any of this stuff created. Things I'd like to see.
What would we be looking at? Like, is it possible? I know what you're saying as far as the worker goes, but do we have the funding if we get the backing from the community?
At the moment, yes. If we got, we need to maximize the worker funding to implement these features. And once the features are implemented, then we use the maximum worker funding to subsidize the liquidity. And we should focus on the core blockchain code for the funding. There is so much side benefit from operating a wallet service. Improving the wallet's user interface is something we all want to see done. But the reality is anyone can create a new website that talks to BitShares, grabs all the users, and provides an easy-to-use wallet. And once you've got the users and the eyeballs on your site, you can monetize them in numerous ways. Whether it's through ads like blockchain.info, or it's through promoting your assets or promoting your side chains or interoperating, simultaneously being a multi-currency Bitcoin, Ethereum, BitShares wallet. There's businesses that can be built on those things. And I think people have seen our strength is in the blockchain tech. Our wallet is a reference implementation to prove that the features can work. But building a successful user interface wallet company is very different. I would really like to see entrepreneurs take responsibility for things like Open Ledger. So I'd like to thank everyone for coming today. I think we're maturing, we're learning, and it's these discussions that ultimately will guide us to greater insights. So,
well, you've got me pumped, Bytemaster. So I'm just going to interrupt real quick, and I'm going to say, can we as a community back this? Can we like push this forward like yesterday? All of us just like congregate and move toward funding some of the liquidity and some of these, like really back it as a community, all of us.
These new changes in this new hard fork coming up where downvoting is eliminated, do you foresee that having...
Not way too much vodka, Ken. Keep it going, buddy. You work hard, so play hard. Now, seriously, I want to see
Fuzzy,
people I can get on board if we push for this. Because
Fuzzy,
if we push for this and we get
Fuzzy, can you hear anyone?
proposals for this stuff to be built on, it's going to be
Let them go.
the side chains and everything. I think
Fuzzy, can you hear
he's
anybody?
right. You guys,
Fuzzy, can you hear anyone? Okay.
He's not listening. He's not choosing to listen.
I wanted to address the the voting changes, the impact of removing negative votes is to actually make it easier to fund things, because it would limit the major negative votes right now to being positive votes for the refund workers, which those votes are already there, which means it's going to be removing negative votes from the other workers, which in turn should boost them up. It's the fact that the negative votes were canceling the positive votes ended up reducing the security of the whole thing, because some other worker would just have to you could create a new worker and start out higher up in the queue because you don't have any negative votes yet. So the impact of the change will only be to secure the network better. We already have a large number of proxies that are voting for funding these things. I think having a few additional workers in play to fund a very specific roadmap and a very specific direction makes the most sense. And if we can outline what we discussed here today of implementing the no fees, then moving to subsidized liquidity within the three markets we said, and then as a final step, move to margin positions. I think that would be the direction that we should fund for blockchain development. Parallel to that is the whole user interface, the user interface for stealth in particular. That's almost entirely a UI issue. It doesn't require any changes to the blockchain to implement that. There's a whole asset that's going to be out there, Stealth, that backs that feature. That asset can be used to fund it.
Bytemaster, when you talk about the user interface for Stealth and being pretty much 100% a UI issue, are you speaking of the out-of-band communication channels that have to be done right now outside the blockchain implementation of that would not require any back-end changes either?
Correct.
All right, thanks.
So effectively then the only way to what do I want to say, filibuster any worker proposals that after this hard fork goes into effect would be to create another refund worker at a higher rate, or no, because the refund worker is for all of the funds then, and whoever is voted above that gets paid out first, right? Is that how it works?
Yep.
So
Yep.
essentially, you just need to get the refund worker would have to have more votes than the actual worker, and that's that.
Yep.
Awesome.
So it's going to be, I think that's a clear path. It's something that the blockchain can do, and we're already moving in that path, right? We're implementing the stuff for doing the free transactions. And as soon as that's implemented, we can implement the stuff for doing the subsidized liquidity.
One last question for me, Bytemaster, is will all these changes that are being rolled out also be in the web wallet as well as the open ledger, or are there going to be segregations of how the features are rolled out, or are they even indeed just back-end changes?
Liquidity rewards will just be a back-end change. The fee change is it's just a back-end change, but the wallet will probably want to take advantage of it. So it's a little bit of both. And the trading as the final step has some UI issues with creating a lending experience.
So these will be rolled out in both Open Ledger as well as Light Wallet. That was the other distinction, as opposed to front end, back end.
All right. You appear to have cut off there, but I gotta go. Thank you, everyone, for showing up. We're making slow, steady progress, and slow and steady wins the race. So thank you, everyone.
Thanks, Bytemaster.
Oh, come on, another 10 minutes and we'll have 2 hours full.
That's what I was gonna say. We've basically ended this twice or maybe 3 times now. Is this the 3rd time?